Die by the bond market? Live by the bond market? Hey, that pretty much explains today's rally. Dow surging 550 points, S&P jumping 1.52%, and the Nasdaq gaining 1.57%. That's a major reversal of yesterday's slump, a virtual do-over, as bond yields finally went higher, possibly signaling better times ahead. First, let me say from the outset that this whole obsession with the 10-year Treasury, it's gotten out of control. You know something's wrong when David Faber and I prattle on about bond yields, even as Jeff Bezos launches himself into space. Don't get me wrong. Long-term interest rates have been plummeting for months, and that definitely signals a weaker economy. The 10-year doesn't drop to 1 and change when business is about to boom. That's too low a yield. It's been quite a contrast from the Roaring 20s scenario we were betting on before the intransigence of tens of millions of anti-vaxxers sabotaged that narrative. We also know that the Delta variant is rampaging across the world, including vast swaths of America that remain unvaccinated. Many areas are going back to mask mandates, and some companies like Apple have delayed the return of workers to the office. But despite these worries, we have no real sense of where the slowdown might be coming from, that the bonds are signaling. I mean, I'm not seeing it. The rise of this COVID variant is very depressing, but the real story might be just how powerful these vaccines are. And here I'm speaking about Pfizer and Moderna in the face of all this exposure. I'm not speaking about J&J. Consumers aren't canceling their plans, even with horrendous spike in cases and hospitalizations. Why not? Because people who've been vaccinated know they're safe. And people who refuse to get vaccinated clearly aren't that afraid of getting sick. It feels like a profound number of people still believe that COVID amounts to nothing more than a bad flu at worst, despite the staggering death toll so far. But there's something else here at work. Something that trumps all of this nonsense. And I'm talking about the things that we actually trade. These things, these prices. Yes, the companies we trade. Remember, we're right smack in the middle of the earnings season. Over and over, we've seen executives find ways to make money. And when that happens, you just can't ignore their success because of the action in bonds. Yep, when a company surprises to the upside, as Chipotle did tonight to 2,000, it's mighty hard to keep that stock down. When a better-than-expected quarter meets the 10-year, the company wins, unless that company is a bank. The financials are too hostage to interest rates to shrug off the bond market. But everything else, well, I'm calling it another story.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.